Welcome to the Real Estate Investor Podcast. I'm your host, Gary Lipsky of Break of Day Capital. I talk to leading experts to discuss a wide range of subjects to educate investors on best-in-class practices to build legacy wealth and positively impact communities. Let's jump in.
Hey everyone, welcome to another episode of the Real Estate Investor Podcast. I'm your host, Joe Fang with Break of Day Capital. Be sure to join our Facebook group, Asset Management Mastery, where we have a great community of thousands of like-minded individuals sharing resources and best practices. Today, I'll be interviewing Gary about our latest projects and what he's been up to.
Choosing the right insurance coverage for multifamily properties isn't that complicated if you know who to talk to. At the Garzella Group, we're uniquely qualified to help you navigate the range of policy choices you have, and we're committed to saving you 30% in the process. We do intensive market research and have nationwide relationships, so we can find coverage other insurance brokers simply can't. We should talk. Go to quotenow.biz and we'll start the conversation.
You've been speaking a lot.
Yeah. I spoke at Phoebe, Pasadena about a month ago about my real estate journey. That was my second time there, and I presented on asset management last week to a private group, and tomorrow I'm flying to Denver. I'm speaking at the IMN Middle Market Multifamily conference. I'll be on a panel talking about key rules of thumb on underwriting when developing a pro forma in today's market. That's a mouthful. I'll also be speaking to a mastermind group on asset management next week. I'm on a syndicator panel at MFIN in San Francisco in early August, and also at OCREA on August 10th. I'm doing another presentation on asset management. So it's funny, they all seem to kind of be bunched together of late.
Well, I know you're a very hands-on person. So do you actually like doing these speaking opportunities?
I do. It gives me an opportunity to talk to investors, kind of get their temperature right now, and to see what they're interested in. So it does provide me with a lot of feedback. And then also when I go to the conferences, I'm talking to other operators, vendors, learning what they're seeing, what their struggles they're facing. If I have a question with something, certainly I can reach out and get answers to that as well. So, I mean, I know you guys have heard this a million times. Real estate is a team sport, and that's exactly it. And so I certainly learn something every time I'm out and talking to other people. So it is really valuable to me. It can be exhausting, but it is really valuable.
I want to also talk about business execution. We know that it's very important, and even more so right now with some of the stuff that's happening in the markets. We strive for best-in-class asset management. Let's talk about some of the wins and struggles. And let's face it, it's never a dull moment.
Yeah, that's for sure. I wish it was all rainbows and unicorns, but yeah, there's always things to deal with. Nothing ever goes as fast as I want it to go, but we're always striving for perfection. Let's start with Pima.
Yeah.
This was a big transformation. Longtime owner, and when you buy from a longtime owner, you're typically going to get a property that's hasn't been updated in a while. Rents are low. It's got some deferred maintenance, and this was exactly this property. So we rebranded it. It was called Dakota Canyon when we purchased it. We changed it to Icon Pima, which is. It's 2 blocks away from another property that we have. They had kind of like some wooden sign for signage. So we got beautiful new signage. We had 2 pergolas, a dog park, a barbecue station. We updated the landscaping. We redid the pool area and added colorful pool furniture. And now we're going to be transforming. It's got the previous fitness center was really tiny. And so we're switching that with the maintenance room. And so it'll be much bigger. The maintenance room will move into the fitness center. We're modernizing the leasing office. So really excited about that transformation. And the residents are just really stoked to see the transformation we've done on the property right now. Our renewal rate is fantastic. Residents are paying $200-300 rent bumps to stay because they know they're getting a lot more value from our property than if they had to move somewhere else. So they feel it's safer, it's nicer. We've added a lot of amenities for them. So really, really proud of that transformation.
Since we just walked it 2 days ago, like I haven't been there for 6 months, and I really saw the transformation. The property looks fantastic.
Yeah, and we've doubled the NOI on an annualized basis, so that's incredible.
Let's talk about Icon on Stella. What's going on over there?
Yeah, so wasn't a huge lift there, but one of our really good projects was they had the leasing office. It was kind of like an L shape with kind of like a clubhouse area, and we met with the property management company and the contractor, and just going over some different designs. And we probably had like 5 different designs for this, but the end result is fantastic. Because one side is a brand new fitness center, which they never had there at the property, and the other side is a leasing office. But they had some beams, they had some really bad lighting, and now it looks so much larger and brighter and really classy. So I'm really proud of that work that we did there. We added a playground for the kids at this property, a massive playground. We did the pool area, some beautiful bright furniture, and it was cool the last time I was there to see so many kids in the pool playing around. So really nice property transformation.
Would you be able to give our investors a flavor of what that means on a net operating income basis?
Yeah, at the end of the day, that's what you're trying to strive for is really boosting that NOI. And so we're at we've boosted NOI 43% on an annualized basis. Wow. Now that doesn't seem as nearly as good as the double, but the double is just is huge. I'll take the 43% all day long as well.
Can you give us an update on Midtown on First? There's some big stuff going on over there as well.
We've had that property almost 2.5 years, and it's not a good time to sell, but we can refi. Now, we bought that property for a little over $8 million. It was student housing. We converted it to multifamily. I think when we took it over, this was during COVID. It was probably like 52%, 55% occupied, and by the summer, we had it to about 95% occupied. So huge jump in NOI. We're refining the property. Investors will get 100% of their money back, and they've been getting a nice 2% dividend every quarter along the way too. So huge win for our investors, and we'll wait for a really good time to sell. And obviously now is not a good time. Everything is discounted, but there'll be a time in the not too distant future when things get frothy again. I strongly believe that. And so when that time is right, that's when we'll sell. And this way, we're just trying to take advantage of market conditions. Now is not a good time, so we'll wait. But the IRR will still be fantastic for our investors. This is a long time project. We started solar probably about 1.5 years ago. It will be finally going online in about 3 weeks. We'll do the changeover, and so we're leasing solar for this property. So we didn't have to spend any money out of pocket, which is great. We could have bought it. But that'll cost, anywhere from for this property, I think it was about 1.2 million. But we didn't want to put that money in. We'll get less of a savings, but we'll still get about $20,000 a year in savings. And so when you divide it by the cap rate on that savings, you're looking at almost $500,000 of value that we've added to the property. So that's huge.
Very cool. Very cool. How about we just do one more? Can you talk a little bit about Icon and what's going on over there?
That's another solar project that we're doing as well. Solar is good for the properties that have boiler chillers. So it's an older property that we bought December 2021. Totally revamped that property as well. Changed the name. It was originally called Ironwood. We painted it. We did landscaping, a lot of the interiors. added a barbecue to the pool area, redid the pool area. We also redid the windows. Typically, you don't do windows on a property. We did windows here. It had a very high electrical bill, so that helped bring down the cost. We did a new roof as well. We're actually doing a new boiler at this property as well to bring down the water and utility bills. So tremendous progress at that property. Oh man, I'm drawing a blank on the NOI, but we've really tremendously boosted the NOI there, the net operating income. And but one of the struggles we face at this property, it's funny on the smaller properties, we've had some higher costs. The boiler certainly is going to help. When we go solar, that's going to help a lot too. We just had a really high phone bill. We just had to renegotiate that. The trash, again, we had to renegotiate that. It was just costing us a little bit more. But it's these capex projects, like I said earlier, they never go as fast as you want them to go. So just I wish solar was done 6 months ago before the summer, not towards the end of the summer, and we would have had a lot more savings there. But it's hard to get vendors on these projects.
Sounds like this asset management stuff. It sounds like it's a lot of work.
Yeah, just tracking everything. Herding cats and just pushing people. Let's get it done. Let's stay on top of it. Yeah, it is a lot of work. You really have to make sure you have a lot of resources, time and money to do good at, to provide a good asset management for your property. And we've had turnover just like every other industry, every property management company, every property out there, and it sets you back. It's not the highest paying job, property management, and also on the maintenance side of things. So we do try to offer a higher salary than other properties, because it does cost you, and it could take a month or two to catch up from that setback of getting someone really up to speed and knowing the residents and whatnot. It's part of the beast, unfortunately, whether you own your own property management company or not. You're always facing turnover. We've been lucky on some properties where we have the maintenance supervisor and the property manager have been there, almost 20 years, I think, for both of them at that property. So that runs so smooth, so you're always trying to get that ownership feeling from that staff, and having them stay for a long period of time, and incentivizing them. Not always easy, but when you can pull it off, it really, really helps.
Is there any other obstacles that the audience should know about?
Yeah, I think when you've got bridge financing, which most people have had in the last year and a half, it's previously you would raise, you'd get agency financing, and you'd have, typically you raise the capital for the capex, so you can kind of change and pivot whenever you wanted. There's a lot more rules and regulations when you're working with bridge debt. You've got to put in draws every single time. It might be slow, so you got to make sure you have enough capital to cover. If you submit a draw, let's say 300,000, you're already out. Most of that you paid the vendors, and it could take 4 or 5 weeks to get that money. So you got to make sure you have that cash flow, which is so critical. And if you don't, then you as a sponsor might need to put that money in, or you're not paying your vendors, and it's not ever good not to pay your vendors. So that's a really important piece. You've got to stay on top of it. If you're making pivots, which you do make pivots at properties. Some places you spend a little less, some you do a little more. So you got to really work with your lender and let them know what's going on and where you want to reallocate money. So you need to have a good working relationship. That's so critical.
Well, as an investor in many of these deals, I definitely appreciate your transparency, and Gary, that's why I started investing with you years ago. Well, Gary, I just want to thank you for providing insight into what's going on into these properties. I'm sure our listeners got a lot of value out of it.
Awesome. Well, I'll be back next week with another informative episode on the Real Estate Investor Podcast.
To all of our listeners, thanks for joining us. And if you like this episode, please head over to iTunes or Stitcher and like, subscribe, and leave a review, as it will help us reach more people. And if you'd like to learn more about what we do at Break of Day Capital, head over to our website at breakofdaycapital.com and sign up for our newsletter and fill out our investor application. We'll talk to you next week.